The following was recorded in front of a live studio audience at the Studio 21 Podcast Cafe. This is the United Podcast Network.
Welcome to Tell Us Why, a podcast for the financial freedom community. If you're looking to succeed in your quest for financial freedom, make sure you join us every week as we, along with our guests, discuss different stories of success, how they were achieved, and how you can do the same. And of course, we ask them to tell us why. Here are your hosts, Jack and Mike.
Welcome to the Tell Us Why podcast. I'm your host, Michael Ketchen. Not alongside Jack today. Jack, unfortunately, had a family emergency. He's not with us. However, we went out and we got, maybe, dare I say, the better version of Jack. I'm only joking.
We won't go that far.
Matthew Hitchcock, former guest, my business partner from Commonwealth Collective, stepping in. Matt, thank you for being here.
I'm excited to be here, and I'm excited for the show, so thanks for having me.
We got a guest today, man. We're going to touch on a lot of stuff. I met this young man. This is one of the best entrepreneurs I've had the pleasure to come across, and we're bringing some great resources to Tell Us Why community. And we are going to be talking to, as I mentioned, to Clay Hepler today. Clay is the Chief Wealth Strategist and CEO of the Creative Capitalist. He empowers entrepreneurs, executives, and real estate investors to create, protect, and multiply their cash flow. Who doesn't love that?
Sounds very fascinating. I'm excited.
I am too. Where are you at in the business today? What are we going to go going on?
Right now, we're trying to work on streamlining some things. We've utilized, obviously, as you know, a lot of technology, but as we've grown, we've kind of piecemealed it and done one application here and another piece of technology here and another one here. So now it's more just trying to finalize and figure out where we're really taking our business and finding one streamlined application that can grow our business all the way through. So that's kind of one of the big things that we're working on right now. So I'm excited.
Oh, yeah. Yep. And for us, 2022, all the goals, I'm focused on health this year. I realize what is the point of all this wealth without health? So Hannah will obviously be pretty happy. I'm sure my doctor will be too.
Are you doing dry January with me?
I can't give up the whiskey for the whole month. I think that's crazy talk. But that is great. So like I said, though, let's get to it. We got a great guest. So before we do that, why don't we hear who this episode is brought to us by?
Are you sick of being treated like just another number by large insurance companies? Do you want a more personalized experience with somebody that you can trust? With Keith Monteith, that's exactly what you'll get. Keith is an experienced professional who can design an insurance plan tailored to fit your specific needs. With access to over 30 insurance carriers, Keith is able to shop numerous markets to find a price that works for you. So if you want an insurance agent that you can rely on and one that has your best interests at heart, then call or text Keith today on 978-241-2363. That's 978-241-2363. Keith Monty. He'll get you covered.
All right. Clay Hepler is a real estate investor who has acquired 13 units in a little over 13 months, all with his own cash. He helped my family's business go from 2 states to 42 in 18 months and set the foundation to have a partnership with Geoffrey Zakarian, the Iron Chef from Chop. We can get into that. I did not know that. And the TV show and owner of many successful restaurants across America. He is the director of acquisitions for a wholesaling and flipping company with over 60 deals done in 2021. Most importantly, though, he is the Chief Wealth Strategist and CEO of the Creative Capitalist. He empowers entrepreneurs, executives, and real estate investors to create, protect, and multiply their cash flow. He helps them set up cash flow management systems and positions their money in savings to earn uninterrupted compound interest while they can simultaneously put it into assets and multiply it. In other words, they can make their money work in 2 places to accelerate their path to financial freedom and abundance. And we are so happy to have him here for the Tell Us Why community. Clay, thank you for being here.
Guys, I'm really excited to be a part of this.
I hope so, because we're going to put you through the gauntlet, man. We got questions. We want to multiply our cash flow. You know what I mean?
We need to make money.
Let's go.
I like it. I like that. So jumping right in, Clay, I mean, Jesus, you got a lot going on. Where are you at in the businesses today? Give us a quick macro view of everything kind of rocking and rolling.
Yeah. So, I think the most important thing was, my journey, right? And so one of my the core part of my journey, guys, was I started out actually in the chocolate business. So kind of a commodity business.
The chocolate business?
The chocolate business.
Oh,
that was
wow,
with
okay.
the family business. Yep.
Yep.
So, I I realized I had a knack for sales when I originally got into the professional world, because I actually dropped out of college. I was working for the State Department in Buenos Aires. I speak Spanish and Portuguese, actually.
Habla
And
español. All right.
un poquito, yeah, un poquito. Yeah. So,
Por qué?
and so, basically what happened is the reason why I do the real estate, the reason why, my true passion is working with entrepreneurs and real estate investors now is because when I was working for my family business and I grew this family business, and like it says in my bio, from 2 to 42 states in 18 months, I met a guy that was worth about $120 million. Mm-hmm. And he was, I was just calling on these small little businesses, your core small business owners. They have all these little specialty shops in the big markets, in New York, the Boston, the Washington, DC. And we would partner with these businesses and sell them our chocolate, right? Very high end, sort of like Whole Foods or like specialty Whole Foods. And I met this guy, and this guy had a family office, right? I mean, this guy was like 0 to 120 million in his lifetime. He didn't inherit anything. And he started to teach me how wealthy people operate, how they think. They just do things differently. That's why I joined a real estate firm. That's why I started to buy real estate on my own. And that's why I'm doing what I'm doing with my wealth consulting business, because at my core, that's my investor DNA. And that's one of the things that he taught me about. You got to focus on the things that you're really good at. Like, you guys are incredible real estate investors. I mean, your growth in the short amount of time that you've been investing in real estate is absolutely like, I'm like, I could never do that. Right. But my core competency is actually thinking about wealth, thinking about cash flow management. And that's kind of where we go, where we're here today. I don't know if that asks any question, but I wanted to give some background there.
Well, I think to jump into it, I think you just hit the nail on the head. And we spend so much time. And one of the reasons, I was so excited to have you on, I was telling Matt, we're doing the show prep, is we spend so much time building businesses, building the wealth. Well, the second half of that equation is okay, you get it. Well, now how do you keep it, and how do you grow it in perpetuity, right? Mm-hmm. So not to kind of put you on the spot, but let's dive in real quick to start off the bat. Multiplying the cash flow, preserving the wealth. You said it's in your DNA. Expand on that a little bit. What do you mean by that, Clay?
Yeah, so, when I looked at real estate, the reason why it was so attractive to me was because I have my money, I invest in something, and I get a dividend and annuity cash flow from it, right? Yep. Cash flow is what gets us to financial freedom. It's what gives us choices. It's what allows us to go on the vacation. It's what allows us to get, buy the house for our parents that they always wanted, right? Which is one of my core goals, right? We'll talk about this later, help my parents out, right? Yep. And so cash flow, if you could control your cash flow, you can control your own personal economy, right? And we'll go into the wealth transfers. When we spend money on interest in our daily lives, when we transfer it away and not put it back in our own personal economy, we mitigate and minimize the amount of wealth that we can create in our lifetime, right? Mm-hmm. So I'm obsessed with, how is every dollar that I'm putting into my own personal economy, by the production that I create, by the value that I can create, how can I capture that and put it into my own personal bank and leverage that not only during my own lifetime, but leverage that in the lifetime of the next generation and the next generation, like the Rockefellers have done, like the Rothschilds have done.
And to jump in right there, actually, I should have asked this to circle back, because I think a lot of people at home are not familiar with family offices, like you mentioned early on. That's a very important niche space. Can you explain real quick, what is a family office?
Yeah. So basically, when you hit a certain net worth, right, it's no longer smart to go to your hometown CPA and advisor, like financial advisor and attorney. When you are in, $80 million, $100 million or up, if you make a mistake on a tax return, or you make a mistake with your legal entity, there's a lot more zeros, right?
Yeah.
On that mistake. And so what happens with very wealthy families is they actually have people like attorneys, like CPAs, advisors, insurance providers, that they have underneath the umbrella of their family that work for them, so that every dollar that the family brings in, usually it's through business or real estate, is used efficiently and effectively. And that's and in the very wealthy people have access to this because they have the ability to pay for this and personalize it to their own situation. And what we can do nowadays because of technology is we can take that family office and bring it into our own personal economy. And that's what I help entrepreneurs do.
Yeah, Mike and I say this all the time. I mean, you need to have a team to really grow yourself to where you want to be. And if you're staying stagnant, you're just trying to just keep everything internal, it's going to cost you a lot in the future. So that's one of the things that we really focus on a lot is just building and making sure we have a strong team with us. So
yeah, that growth mindset versus that fear mindset, that abundance mindset versus that scarcity mindset, where you really you might only get a slice of the pie, but we want that pie to be massive, and everyone else, if you're controlling it all yourself, it really is a short-term thinking. So, staying with that, Clay, and full disclosure, one of the reasons I connected with you is through a mutual acquaintance, because one thing we're looking at for our own business, fortunately we've scaled, we've grown. Yeah. Well, we keep hearing about whole life cash insurance policies. Okay, at the end of 2020, we're going to be somewhere around $40 million worth of real estate. Okay, we're starting to play with some decent sized numbers, if you will. And when we got started, 4 years ago, we didn't think that was going to be the plan, but here we are.
A $40,000 HELOC?
Yeah, $40,000.
Right. Begging the banker, hey, please let me get this loan.
Exactly. Get me going.
We still do that.
So we're real estate investors, right? We're equity rich, cash poor.
Exactly.
So, staying with that though, diving on that, protecting that wealth. Let's get into that multiplying cash flows through some of these streams. And what are you advising? And as an entrepreneur yourself, how are you advising people to go in, and what kind of moves are you making to protect yourself, and what would you advise the community on starting to get more familiar with?
Right. So one of the things that I think about when I look out on our economic landscape and our political landscape is there is a high degree of uncertainty, right? And if you guys, you're going to have $40 million worth of real estate. I mean, give me a break. In like 4 years, I mean, think about it in 10 years, you're going to be a target, right? Like, and I start this by saying you want to be able to warehouse your capital that you can leverage into purchasing more assets in a place that is protected, right? That is tax protected, because the greatest destroyer of wealth is taxes. Now we're talking about cash flow. So how can we take our cash flow and flow it into a system that's tax advantaged? If you put your money in a savings account, right? And this is basically a hyper savings account, you get taxed on that savings. And once you use that money, it's gone from your personal economy forever. Now you get a return from your BRRRR or your real estate, 15, 20% return. But once it's gone forever. So the way I think about this is, okay, how can the cash flow that comes into my system, how can I store it? How can I move it in and out like velocity, right? Because velocity increases wealth, right? Yep. Like that's exactly how our economy works, right? The more GDP in our economy divided by the money supply increases the amount of wealth in our economy. How can I increase the amount of time that money is flowing in and out of my system? Yep.
I think that's a tremendous way to put it. And I think one thing that's coming down the pipe that we're interested in, again, it's playing the long game, right? And we're putting Clay in the spot here. And one of the reasons we're excited to have him is in looking at that long game, transfers of wealth are a big thing. We're starting to look at estate planning now. We're only in our 30s, and we're already being advised to think about that now because it can come fast. Well, imagine working your whole life. We mentioned we had a guest coming up, Dave Garofalo, an older gentleman, has an empire. Imagine building an empire your whole life, and then Uncle Sam ends up with the empire at the end of it.
True.
That's not great. That's a reality for a lot of people. And Clay, there are steps we can take as entrepreneurs and as investors to avoid some of those pitfalls, correct?
Yeah, that is correct. I mean, I think success leaves clues, as cliche as that is. Sam Walton set up a trust with his family when he was in his early 30s, mid 30s. In the majority of the assets in his trust were via whole life insurance. I mean, because he knew that he wanted to pass this, and he knew the tax efficiency of whole life insurance. Now, the way that we structure them is to give investors, because you guys want liquidity, right? Like
Yep.
you want to be able to leverage this cash throughout your entire lifetime. You want to be able to velocitize your money. Well, we structured in a way that there's high liquidity early on, right? 70% of liquidity when you put it in, because there is a period of time that you're paying for the insurance,
Yep.
right? And a lower death benefit versus the normal whole life insurance, which is, you don't even get any cash value until like year 4 or 5.
Yep. Yep.
So in other words, it's a tremendous part of a lot of incredibly wealthy people's estate planning that is able to be accessed throughout your entire life, which is why it's so attractive.
Now, Clay, quick question for you. It seems like, and we've started going down the rabbit hole with this fairly recently, but growing up, I mean, I never heard of. Have you ever heard about this?
Never knew
So
about it,
how many
no.
people do you talk to on a regular basis that are like, I never even knew this existed?
Yeah. So the real conversation actually is around, hey, I heard that Susie Orman and Dave Ramsey says that whole life is bad.
Oh, don't get me going on Dave Ramsey.
Right?
Yeah, the guy who built his
Right.
business on debt will tell you not to take
Right.
that.
Exactly.
Rules for
So
thee,
there's-
not for me. Yeah.
Right. Exactly. So he built his business on selling mutual funds. But let's not go into that. Let's just analyze what he said.
Yeah.
And that's going to address your question. So people say, whole life is bad. The way that they structure it, the life insurance agent gets 100% of the first year commission. The way that we structure it, we get 70% less than a normal whole life insurance agent. So we're structuring it incredibly different. So number one, people say, okay, that's the biggest objection. Okay, there's a cost to this, right? And then the second thing is that it's an education around thinking about your cash flow, right? We have to think differently in order to implement this in our life, right? And instead of flowing a lot of your capital into a bank, you have to have it into a life insurance. That's another thing that's very difficult for people to think of. So those are the two biggest kind of objections: the cost of the insurance, and then where you're warehousing your cash. And when people start to see, very high level business owners and investors like Mitt Romney, I mean, the guy, that he used it during his campaign. He took out a policy loan. Walt Disney used it to buy a portion of Disneyland. I mean, Ray Kroc used it. So like, really successful business people over the history of America has used it. So it's like, it's almost a no-brainer for business owners and real estate investors.
Well, and to dive into Matt's point, and I think this is something we want to zoom out again and tell the community, is 20, 30 years ago, you know what, as little as 10 years ago, this shows how much technology, again, crippled by opportunity. This stuff wasn't readily available. And we started off by talking about the ultra wealthy are doing this. And one thing that's kind of always been our company's guiding principle is we can figure out and implement anything. We're smart enough to do it. We'll work hard. We need to go get exposed to the things that are out there so we know what questions to even ask, right?
Yeah.
And when we're going in now and we're leveling the playing field, we're exposing to that, I think that as entrepreneurs, we have the greatest opportunity in the world because now we can all access a lot of these things through meeting people. Like, I mean, Clay has a great podcast. I think it's don't want to get it wrong, The Creative Capitalist. And, you're talking about these things. That's why we got connected. So staying with that lens, I know you're also doing some real estate. I know you also got some crypto, some other stuff. What are you doing to maintain and multiply your own wealth? What actionable tips would you give the community out there, Clay?
Yeah. So the way I look at investing is like a barbell approach to investing. Okay.
Yep.
So if you think about where I warehouse my cash is in these policies, right? It's 4 to 6% depending on the dividends, tax-free, compounded over my life. I feel good about that.
Yep.
I'm sleeping. It's great. I don't have to worry about it. There's no risk. It's guaranteed, right? And then I have my riskier investments. Right. So on two sides of the barbell, the majority of my investment is in these whole life insurance policies. Then I have my real estate, which is a little more risky, although it's still a part of my core investor DNA. I feel very comfortable. I know how to invest in real estate. I wholesaled over 60 houses last year, flipped over 60 houses. So I know that business. So these two I feel really comfortable with. And then I have a little bit of cryptocurrency because it's fashionable now. And I think that it's a good hedge against inflation as well for some of these cryptocurrencies, which are a little bit more risky. Now, I don't have a lot of my net worth in it. I probably have about 10% of my net worth in it, maybe 8%. The majority is in the cash that I can leverage to buy real estate. But that's how I think about investing. And I think it's very helpful to have that approach to investing.
Gotcha. So to recapitalize that and kind of reform that and think about it. And what I want people at home to realize is these are the multiple streams of income we're talking about. What Clay just said right there, he's hitting on multiple different assets. He's hedging, he's minimizing his risk, but he's not capping his upside by diversifying. And that's one thing that as you start to transition, when you get going as an investor, capital's the name of the game. It's at risk. You got to go find it. But once you get it and preserve it, you have to put that money to work. Go back and listen to what we said about velocity of money. We don't talk about that enough, right? But people thought we were nuts. I'll never forget. When me and Matt started, people thought, oh, you're crazy. How can you give family and friends 12%, 15%? We're looking at it saying, we're buying $1 million assets that produce cash. We got no money in the deals. How can you not get 12 to 15%? Yeah. I call those guys spreadsheet wizards, right? Because they're more worried about the number on the spreadsheet than the reality of what's hitting them. But it's still out there. So you really got to find your risk tolerance. I liked his barbell analogy because that sounds like a way you kind of identify your risk profile a little bit. But get out there and take action and get started, I think is really, really the big thing. So staying with all that, Clay, I mean, you're a relatively young guy. You're going into it. You're taking on this very unconventional path. What is your why? What is your motivation for doing all this and designing this lifestyle the way you want it to be?
So I have to tell you a little story before I tell you exactly what my why is. So a couple of years ago, this is before I met my mentor. I had my girlfriend, who's now my fiance. She's my love of my life. And I remember I took her out to her birthday dinner, and I love to celebrate. I mean, give me a break. You're smoking a cigar before this. We love, we're not doing any dry January. Get the heck out of here.
I am good for us. We'll enjoy whiskey.
Hey, I'm training for a marathon now. So but okay. So listen to the story. This is how pathetic I was. Okay. So I took her to a happy hour at a kind of a cheap restaurant for her birthday and got an old shoebox with an old panty of hers. And I said, here, I didn't even wrap the shoebox. Okay. I didn't wrap the shoebox. And I gave it to her and I said, hey, we're going to go to Victoria's Secret for your birthday. I know you wanted panties. I spent like $50 at the happy hour. I didn't get an entree and I spent $50 at Victoria's Secret. Guys,
this woman's going to marry you after this? You're a lucky guy.
I know. I guess I'm a pretty good salesman, but here's why that's important. Because she has stuck with me throughout she has stuck with me through thick and thin. And I love her so much. And I want to give her a life that is worth remembering. Right? Like a lot of us delay, defer, we scrimp, we save, and this is kind of a core part of my investment philosophy. It's we think about accumulation. We don't think about cash flow. We don't think about today. We don't think about taking the trips, being intentional with the people that we love. Yep. And my why is creating a memorable life worth living and not scrimping, saving today to hope that one day I'm going to be happy. My parents lost everything in 2008. Yep. The crash of 2008, right? My parents, one of my dreams is take my mother and my father on an all-inclusive trip to Lucca in Italy. I want to provide for my family like my parents couldn't provide for me. Yep. I want to give them experiences. And most importantly, I want to give them I want to be the type of man, a father that they can look up to and say, this guy lives abundantly. He gives to other people. He loves what he does. He's passionate about it. And that's why I love doing this, because I love teaching people about this. Think abundantly. This requires abundant thinking. And when you think abundantly, you unlock something that's just totally different. It's a totally different playing field. So that's my why.
Go back and listen to that.
Well, Mike busts my balls all the time about certain things I spend my money on. I'm like, I'm not living beyond my means. But to your point, I don't want to wait till I'm 60 or 70 and then
Right.
experiencing life. I mean, life's too short. So I
So
think
what are one of those things? What are one of those things?
Oh
But-
my goodness gracious! You know when you get those cookies all over your. Oh, I'm so old now. I call them cookies. I will call them ads now, like the young kids are doing. If there's one of those Facebook events going on, I'll say, "Hey Matt, this might look kind of cool." Oh, we already signed up for that. This guy goes to more events. And then, he likes to bust me and say, well, who's the guy who takes like 10 vacations a year? But we're not going to get into that.
Okay, great. No, that's
it all works out. It's all even.
Yeah, right.
And
I love it.
but
That's
I
great,
definitely
guys.
go back and listen to what Clay just said right there, because that's unbelievable, which is actually a perfect segue into what is one book or resource you'd recommend for the Tell Us Why community?
Okay, I'd like to say two. I'm
We'll
cheating,
allow
but
it.
I'd like
We'll
to
allow
say two. So number one is actually, Mike, thanks for reminding me. The Millionaire Fastlane, man.
Oh,
I mean,
yeah.
get out of here. I read it again after we talked, and it's a tremendous book. And it really does teach you to kind of produce value. And I really love that book. And number two, you got to read Rich Dad, Poor Dad, man.
The Bible.
You got to read it,
Yeah.
right? Like these are two foundational books. And what happens when you read these books, it's like this event horizon. You completely expand your way of thinking. And you think about, how can I buy assets to pay for my life? Dude, you should go on a $100,000 a year vacation, right? But you should have the asset that can pay for that. That's the important thing.
Yeah.
So those two books, I'm probably every other guest of yours has said it, but give me a break there.
You know what's funny? We do get a lot of Rich Dad Poor Dad, but Millionaire Fastlane with MJ is, one day we'd love to have him on too, because that book was so impactful. But what I find, and I'm sure you find the same thing, it's so important to be around the right people when you read these kind of books, because your circle's so important, because most people say, oh, it's a scam or it doesn't work. Well, context matters. And like we say all the time, if someone's giving you advice and they're not where you want to be in life, politely ignore most of it, because most of it's fucking worthless.
Yeah.
I'm not going to go ask you, I'm not going to go ask someone who's working at, maybe at a generic middle-class blue-collar job, which is fine, how to go operate a $120 million family office, right? It's not that person's advice isn't worthless. It's that in the context, it doesn't matter. So what I found was when I read MJ DeMarco, and we're pretty successful. We're relatively small in the grand scheme of things, but we live a life that, we've designed and we've been intentional with it. His SENSE acronym that's in that book, that's free, that everybody can go read the book and get the same takeaway on business, has impacted the two guys sitting on this stage to live a life that's unconventional. That book is available for like $12 on Amazon. Anyone can read it. But the majority of people who are going to read it, you know what they're going to say? Oh, it doesn't work. Oh, it's foolish. Oh, it's a scam. Bringing the whole conversation full circle before we transition back to the whole life stuff. There are so many people that I consider intelligent saying this is foolish. You shouldn't do this. Well, guess what? I would say the Waltons, they've done okay. I would say Ray Kroc did okay. I believe it's the founder of Macy's or JCPenney, also funded it with whole life policies. So I look at all these people and I go, well, wait a minute. Where are they at and where do I want to go? And where are you at, the person who's telling me it's foolish, right? So it's very important to be mindful of where your tips are coming from, which, Clay, that was great tips, and that was great. And what we're going to do now, Clay, we're about to put you on the hot seat. So we're going to ask you the big three. And before we do that, though, we are going to hear who the big three is brought to us by the great folks at QS Lending.
It's now time for the Big Three segment, brought to you by QS Private Lending. Are you looking to finance your next deal quickly and reliably with less hassle and paperwork? QS Private Lending is one of the oldest and largest hard money lenders to real estate investors in New Hampshire, Massachusetts, and Rhode Island. Our quick and simple short-term loans require no appraisals and have enabled hundreds of builders and investors to profitably acquire and renovate thousands of residential and commercial properties. To experience the QS difference for yourself, call or text Luke Conroy today at 315-323-0250. That's 315-323-0250. QS Private Lending.
All right, Clay, we're ready to go. Hope you're ready for these. First question we ask everybody, and I think you're going to have a very interesting answer. In your opinion, is college worth it?
Absolutely not.
I love it. I love the conviction.
So when you start to think about who you are, right? We're taught in college to operate in a sandbox. And as soon as you start to think outside, Millionaire Fastlane, as soon as you start to think outside of that sandbox, what happens is you think expansively, right? There's a scarcity that is induced if you go into a lot. I mean, of course, if you're a doctor, we can talk about that later.
Caveat,
Sure, yeah.
But for most people, I got a liberal arts degree. I mean, like I was working for the State Department, right? Like people said, oh, that's a great career path. I'm like, no, it's not, because there's no way to produce enough value to create, you can go up the ranks. You can, it's a time thing. So long story short, I think for most people, college is absolutely not worth it, because you are your greatest asset, not a stock, bond, a book, a piece of real estate. You know who you are. And if you figure out who your investor DNA is, you'll learn just as much working for a guy like Mike or a guy like Matt in a year than you would in college, right? I mean, think about all the swear words you can learn. I mean, these guys probably have I don't even know how many they have, but they probably have many. But long story short, I don't, for most people, it's not worth it. Yeah. It's not.
Yeah, go back and listen again. That was one of the best answers we've had so far, for sure.
I agree.
Right.
What piece of actionable advice would you give your 18-year-old self?
That I would say, get out of scarcity sooner. Do everything you can to get out of scarcity sooner. Scarcity is the greatest destroyer of wealth, guys. I mean, when you play on that level, you don't think expansively. You don't think about investing in yourself. You just think about consuming, constricting, delaying, deferring, saving, scrimping. You just minimize your potential. And so I would say, dude, get out of it right now, please.
Yep.
Please don't. Action. Please. Happy hour, man, on a birthday. Come on.
Oh, I'm surprised you stuck with you after the panties in the box.
I mean, Amy does love happy hour. I go to happy hour quite often, but
there's a reason he's doing dry January. It's because the other 11 months are a shit show. So staying with that, what is one thing you'd want your 90-year-old self to say to you?
Yeah. You were a great man. You helped a lot of people in their financial journey. You built a family legacy and a culture around you of people and family that will last generations.
Very well said. That is great.
For sure, yeah.
Where can people learn more about you, Clay? Where can they connect with you?
Yeah. So I'm social. I love to talk to people. So I'm very active on LinkedIn, Clay Hepler, Instagram, Clay Hepler, and you can go to Creative-Capitalist. My website should be up here by the time we air this to learn more about exactly what I do, how I do it, and really how it could benefit you. So yeah. Or here's my cell phone: 724-708-6677. Shoot me a text.
Oh boy!
We can jump on the phone. I'd love to talk about everything: real estate, wealth building, whatever.
You're putting it out there. I like that. That could be dangerous. First time we've had a cell phone go. I like it.
That's a sales guy right there.
He knows how to close. ABC.
Always be close.
All right. Any parting words for the Tell Us Why community?
Oh my gosh, thank you so much. I mean, when I first got on this call, I was very intimidated because these two guys were sitting behind this beautiful desk. I said, this is great. No, I think you guys are great guys. I think that what you're doing is tremendous, because you're changing the conversation from vomiting questions at someone, which is what a lot of podcasts does, to getting down to what matters, which is why. Like, why are you doing this, man? Like, why are you working so hard? Mm-hmm. And when you get clarity on that, think about how much clarity you can have in your life. So I love what you guys are doing. This is a tremendous show.
Thank you, brother. Appreciate it. Can't wait to bring it. Matt, where can people learn more about Tell Us Why?
www.telluswhypodcast.com. We're also on all social media platforms. So YouTube, Facebook, Instagram, LinkedIn, no TikTok yet.
TikTok.
Maybe Metaverse in the future. Not sure.
Yeah, the way it's going, we will be on the Metaverse before Jack gets us on TikTok. Also, we record most Wednesdays in person at the Studio 21 Podcast Cafe in Salem. We'd love to have you come down. So let's end this with the quote of the week. Not how long, but how well you have lived is the main thing. Seneca. That's a good one for you, Clay. That is so fitting. It's almost like Jack knew what he was doing.
Yeah.
Look at that.
So.
And Jack will be back. Matt, thank you again for filling in.
You're welcome.
As always,
bet on yourself.
The views and opinions expressed by the hosts, guests, or callers of this program do not necessarily reflect the opinions of the Studio 21 Podcast Cafe, the United Podcast Network, its partners, or affiliates.